Across the global markets. Let's find out how we're likely to react and which top stocks you should be watching out for. Dr. C.K. Narayan and Kunal Bothra joining in to share with us their take. Dr. Narayan, good morning. Let's find out then what exactly you're penciling in for the equity markets. Yesterday was a bit of a rough day. 9,800 is where we wound up. What's your sense on the index? Are we likely to follow the rest of the globe? And share with us your top ideas in light of the fact that there has been a bit of FI selling too.
Good morning, Avan. Good morning, everybody. Well, the FI selling seems to be continuing unabated, right? And we had this plus figures only on days when there are these big chunky blocks which happen. Leaving that aside, FIs have largely been yesterday also, something like 2,000 crores of stocks were sold. Not a small amount by itself. However, the market seems to be more inclined to follow what the foreigners are doing overseas, because the Dow was up, a good chunk yesterday, 1,400 points plus, and SGX seems to have followed in that wake and has now created a situation where we are going to have an open possibly close to 10,000 or even above that. Now that is going to put a spanner in the works for the bears who are just getting warmed up as of yesterday. And we left the market, somewhat softish, looking as though it will drop down more or at least stay in a range. So that would have encouraged a lot of option players to go short in options. I think all these guys are going to get, pulled up a bit with the kind of open that we are going to see. And if you looked at the futures positions in terms of long build-up in open interest, you would have seen only a stray case here and there, and most of them were either long liquidations or short build-ups. So the market is devoid of positions, and that would mean that it could make a charge for it on the higher levels, particularly if it starts off from about 10,000 levels. 10,320 or thereabouts was the last high that we created for this rally, and that would definitely come in for a retest. So that said, I would still keep it a little bit mixed, because we are on the edge of doing this. For the long side is a very obvious trade. It should work, because this is the fourth or fifth time that the stock is coming up to stage a breakout. Reliance Industries surged yesterday, good build up on the future side also, and finished comfortably above 1,600. So that's a buy, with a stop below 1,600 for a continued rise to about 1,640.45. It may open with a gap, then you may have to readjust the level suitably. For the short side, I would want to look at Axis Bank, which I think among the private sector banks still looks a bit iffy in terms of its strength. I think there was long liquidations there also. So Axis Bank is a short if the market turns weak. That's a caveat. And I would have a stop loss of about 397, looking for a target 380 if weakness were to show.
Okay, so sticking with one buy, one sell and sticking with the large caps. Kunal, what's your flavor today? Tell us how you're expecting the markets to shape up. Do you think that we're likely to follow the global cues, and share with us your ideas?
Good morning, Avan. I think we should follow the global cues. The recovery which we saw in Dow Jones was nothing short of spectacular. Almost 1,000-point recovery on the Dow Jones and more. In yesterday's session, and that has resulted into the S&P 50 also showing a lot of encouragement. So far, one of the very important data points which transpired yesterday. I don't know whether many traders have actually looked at it or not. But till yesterday's start of the day, or till end of previous week, the 10,000 option for the Nifty strike for the current month was acting as one of the highest amount of open interest. Now, surprisingly, even when the markets were down yesterday, the strike got shifted to 10,500 on the Nifty. So, till yesterday, when the markets were expecting that maybe 10,000 could act as a hurdle, at the end of the day, the markets had a different perspective altogether, and they shifted the strikes to 10,500. So that's a very important point to take note of, that the markets are now expecting that this 10,000 mark should be taken off, and we should be heading back towards the 10,500 mark in the next couple of weeks, assuming the data points remain stable for the next 2 weeks. So I think in that regards, it should be a good market day, not just today, but I think carry forward as well. Two buy calls is what I would initiate, and first one more in sync with what CK mentioned. Reliance Industries. I think the stock gave a very strong and a solid breakout. What was more categorically a good technical pattern for Reliance was the golden crossover, where the 50-day moving average confirmed to cross above the 200-day moving average. That in technical terms we call it as a very strong breakout, and would expect a bigger move for Reliance Industries. So I'm keeping a slightly bigger target, 1725 on Reliance Industries is a positional buy. So even if the stock opens up maybe 10, 20, 30 rupees higher, I think it should be a good buy. Stop loss could be tailed to almost 1565. Second would be about HCL Tech. I think even this IT stock has shown a lot of strength and durability in last few weeks and months. It's been one of the few large cap IT names which has managed to lead the breakout even ahead of the other peers like TCS and Infosys. So I think in that regards, there is the strength of there is this leg of outperformance which is still visible for HCL Tech. So would suggest a buy on HCL Tech as well. A target of 615.